Hi, this is Jack Crooks from Money and Markets TV. China recently announced that it will widen the trading band for its yuan currency, doubling its range to 1% on either side of the price that the People's Bank of China sets each day. Some so-called analysts took this as more evidence that the yuan will soon replace the US dollar as the world's reserve currency. Of course, China would like nothing better, but it's not going to happen, and I'll give you 7 reasons why. First of all, size isn't everything. In other words, it won't make any difference if China surpasses the United States as the largest economy in the world. After all, the US surpassed the United Kingdom for the top spot in the 1870s, yet the pound sterling remained the reserve currency for another 40 years. Second, China has the wrong growth model. If the country wants to have the reserve currency, it will have to push out trillions of yuan and yuan-based assets into the world economy, saddling itself with a consistent current account deficit. That's fine for a country with an open consumption-based economic model like the US. For a country that's driven primarily by exports, as China is, it just won't work. Third, the reserve currency country must have free market capitalism and allow foreign investors to hold local assets. China would have to completely change its political structure, not only to allow money to flow in, but also to allow its citizens' money to flow out freely. Fourth, the average US citizen is actually growing wealthier faster than the average Chinese citizen. You may find that hard to believe, but it's true. Chinese citizens are more than $17,000 poorer relative to American citizens than they were in 1991. Since per capita income is the best single determinant of long-term competitiveness, it's unlikely that the US will give up its reserve currency status anytime soon. Fifth, only 12% of global reserves are expected to be held in yuan by 2035, and that's an optimistic forecast. Quite a far cry from world reserve status. Sixth, China may be facing its own debt bomb. Its official debt load is only 15% of GDP. But according to Reuters Breaking Views, if you include the cost of stimulus programs, plus debts at state-owned entities, local governments, and pension liabilities, the true number could be more like 130% of GDP, and that could dampen growth for years to come. And finally, China's recent attempts to internationalize the yuan could backfire. China has established currency swap arrangements with some of its key trading partners and now allows the yuan to be traded freely in Hong Kong. But if the exchange rate in Hong Kong deviates from the official rate, it may force China's central bank to actually buy more dollars. For all these reasons, I'm not buying the myth that the yuan will soon replace the dollar as the world's reserve currency. So be careful not to get caught up in the hype. If you're looking for action in the currency markets, the yuan is not the place to be. I'm Jack Crooks from Money and Markets TV. Thanks for watching.